Hi, it's Lee, and welcome to the Tesla Economist. A lot of people are bringing up the subject lately of whether Tesla are going to achieve their milestone of 20 million cars by 2030, a target that was initially announced on Battery Day, and the last we'd heard was it was still the objective. There's a lot of debate on whether this is even possible, not just from a supply perspective, but even if it was achieved, would there even be enough demand? Let's discuss how Tesla may actually be able to achieve it from both perspectives, and run through some rough financials too. Firstly, there is the matter of supply. Can Tesla even produce that many vehicles? Well, we've seen the new Gen 3 manufacturing techniques, and if they can achieve all of that, then production shouldn't be an issue. It would just be a matter of making more factories. The existing factories they have now probably have a capacity of around 3.5 million already, so we need 16.5 million more vehicles produced a year. The New Mexico factory will more than likely have a capacity of 2 million vehicles a year, but has a smaller footprint per vehicle output than any of the previous factories, implying that the capex will be less, and the construction time should also be less. Also, we have in the past seen that Tesla are not scared to build more than one factory at the same time, and it's starting to look likely that Tesla are going to be expanding in Berlin and perhaps Shanghai too, fairly soon. So we need approximately 8 more factories producing 2 million vehicles a year. We're even hearing that the Mexico factory might just take 9 months to build. We have about 80 months until 2030, which is enough time to build 8 more factories with no overlap. But like I said, if they're building multiple factories simultaneously, then it is ample time to build enough factories to produce enough vehicles. Also, each time Tesla build a new factory, they improve from the last, as they're continually refining the production technique to reduce parts, processes, time and cost. They also get the hang of building the factories more, so they may become quicker to build. However, it also depends on where they build the factories, as some states, cities or countries make it much easier than others in terms of regulation and cost. The factory cost is relatively low compared to the profits the factory produce from the vehicles that come out of there. Texas was in the ballpark of $2 to $3 billion and will produce about a total of 1 million Model Ys and Cybertrucks a year when finished. If the average gross margin per vehicle was even just $10,000, then that's $10 billion a year gross profit compared to a $2 or $3 billion capex, implying that Tesla will have ample capital or can at least justify all capex required for the necessary growth. However, this is just vehicle manufacturing we're talking about. There are the actual components that are required for vehicles too, namely batteries. CATL are doing a great job producing cells in China, and if anyone is going to be buying cells from them, it's going to be Tesla. CATL are obviously in a relentless pursuit to scale up their cell production. So how many cells may they be producing by 2030? They have a target of over 800 gigawatt hours a year by 2030. If Tesla received half of that, then including what Tesla use now, and estimating that the batteries needed in these newer vehicles are going to be smaller with, say, the compact or robotaxi, which is likely going to be the majority of Tesla sales if we hit 2030, then there is enough cells for around 7 or 8 million vehicles just there. Tesla do have other battery suppliers too, of course, Panasonic and LG, perhaps enough to round it up to 10 million vehicles a year. So about half of Tesla's cell supply for around 10 million vehicles can be supported by their third-party providers. So the remaining 10 million, or half the cells for half the cars, would likely need to come from Tesla's in-house production, but not necessarily 4680 cells. And yes, I know 4680 is a form factor, not a chemistry, but it would seem that 4680 is only going to be Tesla's nickel cells, according to Elon. And if Tesla did produce an in-house LFP cell, it would be in a different form factor. Anyway, Tesla have pretty much already earmarked 250 gigawatt hours of 4680 cells with Texas, Nevada, and Berlin. Probably enough cells for about 2.5 million semi-trucks, Cybertrucks, and Model Ys. So if that's the case, Tesla would need enough cells for about 7.5 million more vehicles, and possibly with something like an average of just 50 kilowatt hour batteries. With whatever the chemistry may be, we might have seen advances in manganese cathode cells by then too, for example. But we're talking about just a further 400 gigawatt hours of in-house cell production for Tesla to hit enough cells for 20 million cars a year. That doesn't sound too extreme. And Elon has also said that lithium shouldn't be a problem at current rates until 2030, implying there's enough lithium for these cells. And he was even referring to refining. However, this does not include any sales being allocated for the energy storage side of the business, of which Tesla are aiming for about another terawatt hour a year there. But we hope this will be addressed by Tesla's in-house LFP sales. Alright, so perhaps it really is possible for Tesla to hit a supply of 20 million vehicles a year. As an investor though, if they were just half the way there, it would still be a good investment. And that doesn't include any of the other sides of the business like FSD, AI, robots or energy. What about the actual demand then? Well, with this next-gen manufacturing, costs come down a lot. And who knows, by 2030, we might be on something like the 5th generation vehicle, where Tesla discovered even more ways of reducing costs. Tesla may have even replaced a lot of the labour with robots. Governments are putting the pressure on the auto industry to move to electric, and incentives are there too. More consumers feel more comfortable purchasing electric over time, and of course costs will come down, which means prices will come down, which means demand will go up. Then, of course, the $25,000 Tesla, which a lot of people think that car alone will have a global demand of about 20 million vehicles a year. And Tesla could make several variants of it, like a compact crossover, hatchback, sedan, 2-door, 4-door, and demand will be sufficient. But this is just demand for EVs. We don't know yet the full extent of what demand will be for AVs when they're full self-driving vehicles. Demand could easily approach 20 million or much higher, and would thus be controlled with pricing. And we have until 2030 to reach this. Oh, and Tesla say 20 million vehicles produced, not necessarily sold. The big question in the community is, will Tesla even sell robotaxis, or will they run them themselves? If Tesla have achieved FSD to robotaxi level, then demand is likely not an issue. Even if Tesla only generated a net profit of $5,000 per vehicle, which I think is low, but if we multiply that by 20 million vehicles, we have $100 billion in earnings. Even with a P ratio of 20, then that is a $2 trillion company, or about 4 times the current valuation today. If you can make 4 times your money in 7 years, then you're still doing well. But of course, Tesla is much more than just cars. And we would expect that costs have come down significantly by then, which would increase net profit per vehicle to probably more like $10,000. And you might say a P/E ratio of 20 is high for just a car company, but Tesla is doing the most in the way of FSD. Just look at the lengths they're going to in order to solve this. On top of that, they have so much data, and think how much more data they have in 2030, and how much more advanced their technology will be, the software and the hardware. And the fact that Tesla currently make billions a year profit from their FSD already today, unlike anyone else. Well, essentially, there is a good chance that it will be solved before 2030. But one way or another, we might expect a P/E ratio much higher than 20. My point is, even if they've not totally solved it by this stage, they should have made massive improvements from today and getting closer and closer, making it more believable it can be achieved. Thus, the P/E ratio would reflect that progress. This is why so many investors talk about what Tesla will be in 2030. Even if we're just at 10 million vehicles a year without FSD, then the stock is still likely a good investment. However, we hopefully do have a high chance that Tesla has achieved FSD by that stage, and it would double or triple Tesla's auto sales profits, and probably double that again with robotaxis, at least within time. Then all the other areas of the business on top of that. So, at a guess, Tesla's probably worth 4 times what it is today just for the car business if they're only selling around 10 million vehicles a year without FSD. But we've shown that 20 million is potentially a possibility. And then it's all about the other areas of the business that, if they line up, might add a zero onto the stock price as well. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.